Thanks so much for your company. I am Pius Kojobaka, looking at our stories. Chief Executive of the Ghana Association of Banks, John Ewa, has indicated that the public can expect a reduction in interest rates starting next week. This follows the Bank of Ghana's Monetary Policy Committee decision to lower the policy rate from 28% to 25%. Speaking to Joy Business, Mr. Ewa explained that the policy rate cut will improve the ability of borrowers to repay their loans, as commercial banks are expected to pass on the benefit of lower rates to consumers.
The policy rate carries about 40% weight in the variables that determine the Ghana reference rate. So with the reduction in the policy rate, today is 31st. By next Wednesday, which is when we will publish the new Ghana reference rate, we should see quite a good reduction in the GRR for August. If you have an existing facility or like existing loan with the bank, and you signed on to a variable rate loan, then any reduction or any movement in the Ghana reference rate will directly impact your servicing capacity, which means with the reduction, then your ability to service is enhanced, and you have a little bit of leg room to operate. Unfortunately, there are some loans within the system that are fixed rate loans. Fixed rate loans is more or less like you and the bank are gambling on where the rate is likely to be. You have agreed what I would call the equilibrium between the two of you, and you've signed on to a fixed rate loan. So that is, in spite of whatever happens, if you sign on to a fixed rate loan, then there is not going to be any impact on you. But if you are sanctioning or going in for a new facility, obviously, a loan pricing is referenced to the Ghana reference rate. And to the extent that the reference rate is definitely going to go down, come Wednesday when we publish it, you are going to have a reduced lending rate.
All right, well, let's explore this angle further. Joining us via Zoom is the president of the Ghana Union of Traders Association, Dr. Joseph Obeng. Thank you so much, Doc, for joining us here on Business Live. Now, you heard the president of the Bankers Association saying that interest rates will start dropping from next week. That's commendable, looking at the timelines or the timeliness of this. Unmute for me, Dr. Obeng. Dr. Obeng, if you can unmute for me, I would truly appreciate that. All right, so we are making frantic efforts to reach out to the president of the Ghana Union of Traders Association to speak to us on the subject matter, which has to do with the Bankers Association saying that interest rates will start dropping from next week following that significant drop in the policy rate by the Bank of Ghana. And of course, we want to get a reaction from the business community on what they make of this development. And we are able to speak to the president of the Ghana Union of Traders Association, Dr. Joseph Obeng. As and when we do have him, we shall bring him on to speak to us here on Business Live. But a while longer on the policy rate, because the head of Africa Economic Research at Standard Bank has emphasized the need for the central bank to modernize its approach to the policy rate. He noted that while the rate has traditionally targeted inflation, its effectiveness is increasingly being undermined by discrepancies with the open market operation rate, which is often not aligned. He made this known at the Stanbic Bank Economic Forum on the 2025 Media Budget Review.
Rates yesterday by 300 bips. If you look at other short-term interest rates, money market rates, whether it's the OMO, whether it's the T-bills, the average interbank rate, for example, it basically means that monetary policy was playing catch-up, right? It was already priced in, and so. When you think about the modernization of monetary policy, which the IMF tries to drive as a reform agenda in many sub-Saharan African markets, a key part of modernizing monetary policy is moving away from targeting money supply, but targeting interest rates instead, right? So inflation targeting, as they call it. And, in many of these markets, inflation targeting or interest rate targeting, makes sure that there's a certain rate anchor, could be the interbank rate, could be the central bank rate, that is within a corridor, right? So could be the monetary policy rate of the Bank of Ghana that is within a 250 basis points corridor of the interbank rate, for example, or the OMO. So when the OMO rate in that instance is not referenced off the policy rate, it kind of blunts the transmission of monetary policy, in my humble opinion. And I think, that's something that the Bank of Ghana Monetary Policy Committee should look to kind of streamline once again. The quicker, the better.
Thankfully, the president of the Ghana Union of Traders Association, Joseph Obeng, has joined us live for us to have this conversation. Thank you so much, sir, for rejoining the conversation. Now, I did ask earlier your opinion about the Bankers Association saying that interest rates will start dropping from next week. And I'm saying that is commendable, isn't it?
Yeah, it's very commendable. But you see, let me first of all commend the Bank of Ghana for this reduction. It's going to be a great relief to the business community. You see, all economic indicators are responding positively to the stability that we are having now. Inflation is getting down, interest rates is also going down, and then exchange rates. These are the pillars upon which businesses thrive. So it gives us a lot of hope. It gives us a renewed hope. This is a very commendable move by the Bank of Ghana and the committee, Monetary Policy Committee. We believe this cut will lead to a corresponding reduction in lending rates by the commercial banks, as the Bankers Association CEO is talking about. But as to whether it's going to be a significant reduction by the banks, that's also very important. You see that most times the gap between the central bank, that's the monetary policy reference rate, and the commercial bank lending rate is too huge. And then there seems to be no control. If even we are not given a gap or ceiling, there should be kind of control that it shouldn't be just open-ended for banks to use risk as a reason for overpricing the cost of borrowing. And so I think it's about time that we also have a discussion with the Bankers Association, the Bank of Ghana itself, to find ways to bridge up the gap between the commercial rates and then the monetary policy reference rates. Yeah, that's very important. Otherwise, everything is okay, and we are very grateful and hopeful that is going to help alleviate the plight of businesses this time around.
That's fine to make that argument, but from where you sit, is that to suggest that you will also translate that in the way, by way of price of goods also dropping when you go to the market?
Yeah, so that's why I use the word significant reduction in the interest rate by the various banks. So cost of borrowing is a key component of pricing. And so it is very essential that if you are talking about the interest rate going down, then it should be very significant so that it can affect the pricing of goods and services.
I appreciate where you're coming from, but at the end of the day, the Bank of Ghana has reduced the policy rate. The committee, MPC for that matter, has reduced the policy rate. Following that, the Bankers Association has given that assurance that from next week, we will also see some reduction in interest rates. Now it comes to you as well. Regardless of the margin, like you're pointing out, are we likely to see whether marginal or substantial?
Yeah, and that one is it varies from bank to bank and from negotiating to negotiating through personal banking and all that. But I still on the view that the gap between the commercial bank rates and then the reference rate is too high, and that's how significant it is also will impact positively on the pricing. And so it is also very important. That, you see, that's why I'm giving the emphasis on how significant it will be. But the banks always dwell on risk and all that. We've gone past the risk and all that. They overprice these interests based on the risk that we have. But nonetheless, once we are going to have some kind of reduction, definitely it will have, because we cite cost of borrowing as part of our prices going up. So if the interest rate goes down, definitely we'll have a corresponding reduction of the prices. It's very obvious. But then I will still insist that we have some control over the mainstream commercial banks and their rates. The gap is just too much.
All right.
That's where in other countries they put a cap on the lending. If you are not even able to put the cap, we should have some kind of controls so that we can have reasonable cost for our credits.
So what reduction are you looking at?
Yeah, it depends from bank to bank because they don't have a fixed rate for me to mention a specific rate. But definitely, I think customers have to start doing proper negotiation with their banks, much as we are also insisting that the central bank should have some form of controls over this unlimited pricing of the cost of borrowing.
President of the Ghana Union of Traders Association, Dr. Joseph Obeng, thank you so much for your input at this very moment. I truly appreciate it. I want to see all longer the central bank because Governor of the Bank of Ghana, Dr. Johnson Isiama, has revealed that the central bank is currently working to ensure that all foreign exchange earned outside Ghana are brought back into the country. The move has been influenced by reports that most of the country's earnings on exports and other activities are not brought back. Speaking at the Monetary Policy Committee press conference, the governor noted that the exercise will help stabilize the cedi.
Now, what we have seen is that certain inflows appear to have reduced, especially remittances. Remittance inflows appear to have reduced since April. We are investigating that thoroughly. Only yesterday, we released a notice to banks, PRSPs, MTOs and the likes, and I'm sure you as the media, you have seen that notice. We want to monitor these flows to make sure that they accrue to the system. We are going to be very active on that front. We are following up with certain data requirements from all those players in the remittance space. Once we do that, the inflows will begin to come in, and whatever pressures you might be seeing locally should be contained. We are also moving ahead to monitor the nostro balances of banks. From now on, we will be monitoring transactions, in the nostro balances of banks, all in an attempt to make sure that we don't have offshoring going on, as the technical term is used, and that all Ghana's foreign exchange that is earned from abroad is made available to the system to fund our imports, to fund economic activity, and that should help to stabilize the exchange rate going forward. So the good part is that our external sector is strong. We are not vulnerable on that account. The fiscal part is strong. And so there should be no reason why our local currency should be weak.
Meanwhile, Professor of Finance at the University of Ghana Business School, Eli Plema-Bloyo, is urging the Bank of Ghana to continue enforcing the Foreign Exchange Act as a critical step to stabilize the cedi. He's been speaking to Joy Business.
So I believe that it's important that we live our legal tender is the cedi. Okay, so it's important that pricing is done in the cedi. Continual pricing in foreign currencies introduces risk for the cedi. It makes it more likely that the cedi will depreciate. Okay, so these measures are welcome. I think they are important. I think that they will help to stabilize the currency. A lot of transactions in our part of the world takes place in the black market, and The black market really does not sometimes help because the margins there are very high, and that contributes to the depreciation of the currency.
On to one of our lead stories. The Ministry of Communication, Digital Technology and Innovation has announced the establishment of a $1 billion tech hub to host global tech giants such as Microsoft, Google, and more. The sector minister, Samuel George, made this revelation at the MOBEX Africa Partnership Day. More in this report.
The MOBEX Africa Partnership gathered policymakers and players in the technology ecosystem to deliberate on collaborations for the advancement of Africa's digital future. Addressing the gathering, Minister for Communication, Digital Technology and Innovation, Sam George, disclosed government intention of establishing a $1 billion technology hub in Dawa. The hub, when established, will host global tech giants and support the growth of local tech companies.
Here in Ghana, the reset is already underway. We're implementing critical components of our digital Ghana agenda, from expanding last mile connectivity in rural communities to the launch of a $1 billion Ghana UAE Innovation and Technology Hub in Dawa, Ningo, to host the African headquarters of global giants like Google, Microsoft, Amazon, Huawei, Nokia, Samsung, Apple, whilst we believe we will also host homegrown talents like MOBEX, Margins, Insano, Haptel, and others.
Chief of Staff at the Presidency, Julius Debra, expressed optimism about government's digital agenda and its economic impact.
The government digital development agenda is guided by a set of well-defined partnership-driven commitments outlined in our manifesto, and this includes complete the Eastern Corridor fiber optic project by 2027, extending broadband access nationwide in collaboration with local and global providers, strengthening the Data Protection Commission by 2026. Collectively, these priorities will create an estimated 200,000 direct digital jobs by 2028 and position Ghana as West Africa's leading digital hub, contributing over $2 billion in annual digital exports.
Meanwhile, George Spencer Quay, CEO of MOBEX, called for effective partnerships to develop the ecosystem.
At the heart of MOBEX Africa's mission is the belief that no single entity can transform the continent alone. Governments may create enabling policies, private enterprises may develop cutting-edge solutions, and innovators may bring fresh ideas to life. But it is through partnerships that these efforts are amplified and sustained.
The ceremony also celebrated a decade of championing digital transformation by MOBEX Africa.
You can always get business stories when you log on to myjoyonline.com/business. I am Pius Kojobaka, always a delight serving you. See you at 8 p.m. with Prime Business.